Do you believe that buying more Tesla shares is a wise course of action whenever the company's stock is down about 50% over the next 90 days and is trading at a somewhat depressing price, particularly for the average investor who often anticipates making some money from their investment? The price of Tesla's shares is becoming frightening. However, the stock price continues to decline at an uncomfortably rapid pace for some inexplicable reasons. Elon Musk, the president of Tesla, is allegedly selling additional Tesla stock, which exacerbates the situation. Are you really going to keep your Tesla stock? Welcome back to Tesla Hype, everyone. Many people blame Musk's recent agreement with Twitter for the decline in Tesla stock prices. The problem is that most investors are unable to distinguish between the companies and the stock's performance with solid long-term fundamentals. Tesla is far from going out of business. The stock price will soon resume its upward trajectory. On the chart, here is a quick look at a few of the possible causes for Tesla's stock price to soar in the near future. Take careful note of the following. However, before we begin, please make sure you hit the like button, subscribe to our channel, and enable notifications if you enjoy this type of video so that you can stay informed about all of Tesla's developments. First off, according to data from the China Passenger Car Association (CPCA), Tesla delivered a record 100 to 191 vehicles from its Shanghai Gigafactory in November as a result of increased capacity and price reductions from 71,700 for units in October. Deliveries from the Tesla Gigafactory increased by 40% in September. The carmaker also broke the previous record of 83,135 automobiles. China's economy was affected earlier this year by lockdown and pandemic crises. For the second consecutive month, the official Manufacturing Purchasing Managers Index remained below the 50 line, dropping to 48 in November, the lowest level since April. Tesla's plant ramp-up followed a 2-month shutdown that prompted the factory to halt operations due to a spike in coronavirus cases. However, it appears to be catching up quite fast. The founder of the Shanghai-based EV news website CNEV, Fei Cheng, claimed that Tesla's capacity growth has enabled it to flexibly organize production based on the orders it receives. Even if the CPCA did not disclose the quantity of vehicles exported, whether consumption slowdowns will have an impact on Tesla's business is still unknown. Even though the month seemed challenging, Tesla's third quarter was a record-breaking one for the company. Despite the fact that it fell short of some expectations, it appears that Tesla will not slow down in the face of the numerous challenges that electric automakers are currently confronting. The business has begun a race to maintain its dominance in the auto sector, and it is probably going to keep going in that direction. Tesla reported that it delivered 343,000 electric cars to its customers in Q3 of this year, setting a new delivery record. The end-of-quarter push to reach aggressive delivery and production goals exceeded expectations. Despite the EV automaker's first-half delivery and profit reductions, significant efforts are being made to guarantee that Tesla meets its vehicle production goals for the year. And the company also intends to greatly enhance production in the last quarter of this year, almost twice as much as the $1.6 billion it made during the same period last year. The automaker's net income for the second quarter alone was $3.3 billion. The company said that problems with 4,680 battery cell manufacture, difficulties ramping up production at its operations in Texas and Germany, and rising raw material costs barely offset profits. Another aspect contributing to Tesla's second quarter results was the dollar's rising. Another aspect is that Tesla's factories, including the new ones in Texas and Berlin, have significantly expanded globally. Tesla intends to expand its German manufacturing to a point where it can accommodate about 12,000 employees. At the moment, the Berlin plant exclusively assembles the Model Y, and Tesla produces about 1,000 EVs every week. In the long run, though, the factory is expected to start producing the Model 3 and eventually generate around 50% of 1 million vehicles yearly, according to Elon Musk. A worldwide recession is imminent and might continue until the spring of 2024. Nevertheless, Tesla intends to increase output at the business. Do you believe this is a wise decision? Tell us in the space provided for comments below. Although the availability of more efficient 4,680 cells with its new battery design has limited production at Tesla's Gigafactory in Texas, the automaker and Panasonic's partnership is expected to help alleviate this bottleneck by mid-2024, when Panasonic starts producing advanced cells. at its approximately $4 billion battery plant in Kansas. According to Wedbush analyst Dan Ives, Tesla's output fell by 50,000 to 70,000 units between April and May. Other analysts predict that the economy will continue to deteriorate in the near future, possibly into the first quarter of 2023. However, Tesla upgraded its Shanghai Gigafactory in August, raising its capacity to 1 million vehicles annually, a 30% increase. Tesla might soon reach its anticipated production levels with a significant boost to its factories. In related news, Tesla has begun shipping its semi-trucks to real customers. Tesla mostly restated its prediction for its December semi-truck production objective and its goal of achieving a 50% annual growth in vehicle deliveries in its second quarter letter to investors. At last, these trucks are beginning to travel, making sizable supplies to businesses like PepsiCo. Tesla is anticipated to introduce a number of different vehicles, including the Roadster, Cybertruck, and its eagerly anticipated low-cost EV that will be less expensive than the Model 3 and Model Y. Although Tesla has not provided many details regarding its Cybertruck launch plans, aside than stating that it has advanced industrialization, it is anticipated that production will start shortly, most likely by the following year. In addition to having amazing features, these cars might arrive at customers' locations sooner rather than later, because Tesla is trying to shorten wait periods for its cars, as automakers and investors prepare for a slowdown in the largest vehicle market in the world. Recent business data revealed that Tesla increased its EV inventory in Shanghai at its quickest rate ever in October. This is in line with how the business operated a few months earlier, when some customers complained about waiting up to a year. This might have occurred in one of two ways. Either demand for the cars has decreased, or Tesla has greatly shortened production periods to maintain shorter wait times. However, because Tesla's demand doesn't appear to be decreasing in any manner, it is most likely the former. Wait times for Tesla have significantly decreased. The performance versions of the Model 3 and Model Y, as well as the Model S or Model X configurations, are anticipated to be delivered between November and December. Customers can purchase Tesla automobiles without worrying about an excessively lengthy wait period, thanks to shorter wait times, which may enhance demand for the carmaker. The Tesla Model Y topped the list of best-selling cars in Europe in September, and Tesla's EVs have recently secured positions as the best-selling automobiles in a number of nations. Over time, Tesla's automobiles have frequently been to the top of the sales charts in particular European markets, but until recently, they had never been the best-selling cars across the continent. With 29,367 Model Es registered in September, up to 127% from the previous year, Tesla's first utility vehicle has topped the rankings in Europe for the first time, according to new vehicle registration data published by Yotto Dynamics. In the September rankings, the Tesla Model Y replaced the Peugeot 108, which came in second, and the Renault Dacia Sandero, which came in third. The price reductions on several Tesla EVs on October 24 further support this obvious proof of Tesla's excellent performance.